6, 2023. I'm going to do a weekly overview since I have some time today. Always start with looking at what are the news and what are the information flowing out over the weekend. Typically I do this on a Sunday night, Sunday evening, kind of like give me a broad overview of what have happened and what might happen. Now, I don't make predictions. It's very important that I don't make predictions. I make projections, but it have to be empirical based. It have to be data based. It have to be data driven, because I'm always seeking consistent result. It have to be repeatable. If I'm just going to speculate, making a guess, that to me is like going to a casino, and we all know that's just even less than 50% of winning. Right? I always need to skew the probability, the chance of winning on my side. So I trade on empirical data. I don't make predictions. And how do you do that? I mean, if you look at the news, a lot of the news is actually opinions, right? There's also basically two types of news. There's fact and then there's opinions. You have to separate the opinions and the fact. Like for example, right here, Americans are going abroad indoors at the expense of domestic travel. Right. So that is more effective. It's database. If it's just telling me that time period, how many Americans are flying overseas and how many are flying domestic in US, that is the data driven. Right. But if it's just saying that, oh, I see more Americans getting on international planes, that's not necessarily the case. Right? You have to be empirical data driven. In that sense. Now, do they? I think what opinions, right? For example, Goldman Sachs' future hinges on a low-profile, high-growth business. Now, that's making projection, making assumptions. Like Goldman Sachs' futures is on its own different pathway from periods like the merger, acquisition, and the trading before. That was used to be what Goldman Sachs was famous for, right? They advise business, consult, do mergers, M&A, and on the other hand, they also have the high-profile trader, which is kind of like a boom and bust business. But right now, on this article, is saying that the futures, they have to change direction. They have come up with different business strategies and stuff like that. Who knows that's going to work out or not? Those are assumptions. So you have to separate assumptions and facts and data. And you use facts and data to help you make better projection. You don't use assumptions to project, right? So probability is only 50-50, and then you make more further assumption. You multiply those together, right? On that, your chance of winning become lower and lower every time you make more assumption into the model. This is why it's so important to have actual data driven, to have event that taking place, and that is what technical analysis is. Technical analysis is not really making what's going to happen in the future, what might happen in the future. We're just looking at, okay, this is what I have done, and have it continue what I have done. This is the likely outcome, but chances are it might not, and there might be a possible other outcome. But if it's going one direction, chances are people will continue to follow that direction, the general trend, and that in that sense, and give you better pictures of overall pictures or where it was and what they have done and where it is now. Right? But that's all historical data. Right? In that sense, that it kind of like Newton's law. Once things are set in motions, it tends to continue in that same direction. This is why trend happens. This is why trend falling makes sense to me. Now, to other people, it might not, then they trade on their other assumptions. Right? To me, a trend is head average. Like from here, this is going up and making high and lower lows. Right? This is a trend. You cannot argue this is not an uptrend, because it is an uptrend. It is going upward in that sense. Right? It happened. Now what's going to happen next? Who knows? But based on that assumptions is that if everything stays the same, then going forward things will move in the same directions. Right? That is actually very powerful if you really think about it, the revelation. Right? That once the wheels start to turn, it is very difficult to stop a car going at 60 miles per hour. Even you slam on the brake, there's still momentum dragging the whole thing. So, same thing. The market is the same thing in that sense. All right. So right now, let's look at this. This is the Dow Jones Industrial Average, right? DJIA. The tradable, which is diamond, the ETF, and it has been it has been on a pretty nice uptrend. Right? As you can see very clearly, right? Starting, let's say March, went up. I crossed through this red line, right? I always say this is a 200 days moving average. At one point it's below, and then it's zigzag in between, and then it went through the 200 days moving average. And hey, that's great. That means there's more buyers than sellers. More of a bull market when it's above 200 days moving average, in that sense. So it continued to go up, and then eventually you can see it bounced off, and it retraced, and then it touches the 200 again, and it gave me a doji style, a long tail, penetrate, came right back, bounced off it. This is signifying that the buyers are still there. That's why it bounced off a 200 days moving average. This is a good signal to go long. However, the issue is that because if from bottom, right here, the bottom, to the top, which is here, on the first up move, uptrend, this retracement move, right, the reversal, as you can see, it's like clearly 50% of the whole first trend. So when it's a 50% retracement or reversal, it's a relatively weak, which makes sense to me actually. Should make sense to everybody because it just came off. It was fighting a 200 moving day surge. It came off and broke through, and then eventually you want to test it again. Over time, it tested again, and that held, and it bounced off. So that tells me we're in a buyer's market. I want to go long on this instrument. So the next move is either I wait for a false hammer, right? Break up, retrace. What I'm looking at is the peak, the previous peak right here now. Right here at this peak, if the price action go above this level, that's a breakout on the upside, which took place here. Alright. But breakout, a lot of time, unless it's a momentum move, unless you see it has fundamental reasons behind it, chances are it could be a false breakout, which is the case right here. You have one big momentum bar right here on the breakout, right? Broke this high on this bar. The problem was this is that the following day is a red bar. You erase half of the gain. It came back down. Have it been at least a 3-day up bar, then that's a momentum move. Right. But it's not. So if I open a trade on the next bar, right, which is if it makes a new high on the breakout bar, this is a breakout bar, is when the price actually make a new high, that's the first entry. So right here is, I mean, question whether this will be a trade there in actuality, right? Right? In that sense. And if I have taken this trade, if we trace, bounce off all the way back to what? The blue line is my 50-day moving average. The white line is 21-day moving average. So it bounces off this important area and then it make a new high again. So this is the reason why on a breakout trade, I do not use outright on the underlying. I do not buy the stock. I do not buy the ETF. I would sell options. I would sell put options at 20 and below delta. So even when you retrace, you have to go all the way through a 20 delta options, put option that is sold for me to lose money. That put a probability, much higher probability on my side on the breakout trade, which is the stocks trade that I had last month. I was only one trade last month if you look at my channels. As the SOX6, and it exactly did this. It did a breakout. it moved up 2 more bars, and then it came back below the breakout point until it hit a technical level of one of the moving average, and then it bounced off that. Had it go through, then I know the trade is so weak, I might have to find exit on the next up leg. But if it doesn't, it bounces off this technical level on the SOXX, so I end up making money in actuality. Had I just buy SOXX on the breakout, I would have lose money. Right. So again, I have 3 main strategies. The first one is a trend falling, pull back, and then look for a setup, what I call false hammer, as is in one of my video. My second setup, and give me a good 65 to 75% chance of winning, is these breakout trade, which I did last month. The third one is the most difficult one, which is called reversal. And I rarely do these reversals unless everything really aligned, because reversal is really 55% to 65% chance of winning outright. Of course, when I use option, I increase my probability much more, but still, why would I want to do that? Unless everything really aligned, I see that the whole fundamental has to turn. Again, the fundamentals get reflected into the technicals, and that's why I trade the technicals. But behind my technicals has to be fundamentals. Sometimes when the market's moving, I see a trade, I will just put the trade on, send my order out, and then start taking the fundamentals behind why is the stock gapping and moving like this. Right. And the fast moving market, I will put the trade out. If I don't find the fundamentals, I'll be wary. I might close the trade early, flat or lose a few bucks, that's fine. Right. I want to put it out at good positions, especially when it's moving. Right. So it happens sometimes. Most of the time, I have time. I use daily bar. I look at end of day data, so I have time to really think and try to figure out why. What are the reasons behind the stock's move? And I got to find facts, not opinions. Has to be facts supported by data. That's a huge difference. All hedge fund, all traders, when they ask, why do you take this trade? You must give empirical reasons. Why? Not just because you have a hunch and you bet a bunch. That's speculating. There's no place for that to make money. You cannot consistently make money when everything, not even everything, most of your trade is based on guessing, based on news, not on data. I wait for data. I wait for the market actions to prove me right or wrong otherwise. That is the key to become a successful market player. There's no other way. You can try all the other way, but eventually you cannot have consistency, right? If you cannot have consistency, then you're doing all this wrong. That's too much of a chance of you losing. You're not in control of your own trade, I mean. Right? You cannot control the market, you cannot control news. Right? But you can control your trading mindset, your setup, your exit, and you want that to be a repeatable process. It's very important that you have a repeatable process and you have a consistent way to make money. And when I say a consistent way of making money, it's actually a consistent way of finding a good trade, of good setup. When you have a good setup, good trade, and everything is followed through as you have expected, scenario A, scenario B, scenario C, and you have options to deal with those, then you have a highest, much better chance of making good trades. And when you make good trades, over time, money will follow. So what I'm trying to say is that make good trades. And that all starts with how you look at the market, how you analyze the market, how you wrap everything up into a consistent way of a repeatable process. That's the first thing I was taught to make money. Regardless of what you do, you need 2 things. You need a repeatable process and a scalable process. This is how you make money over time and consistently, not only consistently, but you can scale up and make a lot of money. And to me, I was taught during my MBA days, and that just opened up my mind to a whole different world. I decided the market, the investment market is where it's very scalable, and you just have to find a repeatable process. The repeatable process took me decades. I have tried everything, to tell you. I've tried everything. A drop of a trader, if a portfolio manager, is finding ways to make money. You're constantly finding ways to make money. The strategies that are already making you money, you don't have to worry about it. It's on other proofs they're going to make you money. You just have to find new ways, because who knows when, how, or why that old strategy that was making you money doesn't work anymore. If you look back in history, there's so many companies closed down. But at one point, they make a lot of money. Sears Roebuck, right? At department store, that was the beginning. They invented the idea of department store, of malls. But then, eventually, I look at the malls today. New technologies, new type of market, new ideas, will phase old ideas out. So it's making money. But there are certain things that will hold true over time. Like fundamental analysis. If the book is correct, if it's audit, if it's not fake, you cannot hide the fact that you're making money or lose money. Over time, you cannot hide that over time. A company is making money over time, you will reflect year over year. Right? This is what investment is about. This is what trading is about. You find consistency. You find repeatable process. And then you find scalable process. You find something that liquidity. I don't trade low volume stock, low volume options. I follow where the money goes, where the volume, their liquidity, so I can get in and out. Instead of something that fully traded, even if it go to $1 million, if nobody buy it from you, you're holding it. It's just mark to market for $1 million from the last trade, but you try to sell it, nobody want it. Then you're gonna have to discount it, because there's no liquidity in that. So you want a scalable instrument. Well, the US market, the stock that are inside DJIA, inside NASDAQ, inside SPDR, these guys have a lot of liquidity. Especially when monies are moving in, when they're trending. Everybody playing those guys. Like this year, the whole year is about AI related stocks. So I play the semiconductors. Those were hot. Going up. The downs, the regional banks. But I don't even bother the regional bank, because all these semiconductors are moving so nicely and they have so deep liquidity. You can have hundreds of $1 million sink into it, won't even do much to it. So you have huge liquidity. I'm just a little fish, a little guy, and go in and out. I have my few contracts, and that's not a problem. I can slowly buy a lot of contracts or sell a lot of contracts throughout the day. The option contracts, that's beautiful, that's great, scalable. I can make, a lot of money as I scale up. So in the end, it's about repeatable process and scalable process. You have these two, and you have consistency, you will start to make money. And slowly over time, you build yourself up, and then the sky is the limit. And guess what? These things can be passed from generation to generations. How to analyze the market, how to analyze the company, how to create wealth. And that's great. So I know the coming generations, once they learn this stuff, they have a better chance of building wealth instead of speculating, gambling. And that's what I want. I hope everybody can build wealth over time and enjoy what they want to do in life and contribute back to the society. So this is my contribution to society, hopefully, to have everybody build their own wealth and then pass on that wealth to make the world a better place. Okay, and that's it for today. Thank you for watching. And again, a lot of time I will go off to a direction of topics, especially on the weekends. There's not much news going on. I don't see any much going on. Technical wise, the market's just running off. Right, I'm looking at this level on my 21-day moving average, the white line. Right, this might, if it's penetrated, it might bounce off these levels. Then I might have false hammer continuation of a trend after retracement. I might have that, and I'm looking for that as the market comes off. As the market goes up, I look for breakout. Market comes off from an uptrend, I look for a false hammer trade. So market go up, I can find trade. Market comes off on the trend, I can find trade, and that's good. I don't need to do a lot of trade. I just need to find a good setup, and then money will follow. And yeah, so I will wait. I will wait for the market to show its hand, and when everything's aligned, then we have a trade. And a good trade, have enough good trades, good setup, over time, you're gonna make money. The money will follow. That's how it always works. Okay, that's it for today. I see everybody next week. Thanks for watching.